Hey everyone, thanks so much for joining Think Realty podcast today. If you're a viewer, a listener, a downloader, whatever you are, thanks for joining us. We love being a part of your real estate investing journey. For the millions of real estate investors that Think Realty touches every single year, we're glad that you're one of them and that we can help you along this journey. We always bring great guests. Eddie Wilson here, the founder of Think Realty. I want to make sure that I always bring great content, great guests to you. And today I'm jumping in to host some of the podcast because I love some of the guests we get to interview today. But before I jump in, let me say a quick thank you to our podcast sponsor, which is Real Property Management. Real Property Management is a fantastic property management firm. Working with the right property management firm can put more money in your pocket, not less. Real Property Management provides a higher standard of property management to make sure you're maximizing the return on your investments. Experience the real difference today with Real Property Management. You can visit them at realpropertymgt.com. Our guest today is from one of my favorite lenders in the marketplace, RCN Capital. We've got Nate Zielinski on with us today. Nate, so glad you're here.
Thank you so much, Eddie. It's a pleasure to be here. I have actually written some articles for Think Realty in the past, so I'm glad that I've graduated to the podcast camera now. So I'm ready to go, ready to have a great discussion. And thank you for the kind words regarding the company.
Yeah, absolutely. Yeah, Jeff Tesh, owner and one of the founders of RCN, as CEO, is one of my favorite people on the planet. I've spent a lot of good time with Jeff and a lot of the team there, but have a lot of respect for RCN. Let's kind of jump in and talk through where we are in the loan marketplace today. I mean, right now, it's been a tumultuous year for lenders and real estate investors, and things have been moving. Today, we see a potential rate hike. I think actually it might have already been announced. I don't know. But we know that there's going to be movement in the market. And I'm just kind of curious, your take on the current marketplace, what's going on? I know that we might as well get the rate question out of the way. Yeah. I hate talking rate because I think it's one of the least important things. I feel like we should be underwriting for whatever it is for us today, and we should build relationships in lending. But we might as well get it out of the way because I know that all of our listeners want to know, that question. What are the rates? What does it look like? Where are we going?
Yeah, no, I agree. It's been tumultuous is a good word for it. Today it's going to bring some more news to the forefront to kind of get a better idea of how we're going to close out the year of 2022. But rates have gone up for us. I don't think that's any surprise to anyone listening or anybody that is in this industry for the long haul. But I think that's what's really important is to kind of take a step back and realize, like you said, you're building relationships. You're trying to find trusted people that you can work with, especially lenders, since they are the one, working with you, trying to cut that check. So I think that this year, more than any other in recent memory that I can think of, has been a great tool for people to kind of, toughen up, see if they can survive in this environment. There has been some recent, rush to the market over the past couple of years. So I think some of the saturation kind of went away from it this year when people kind of got scared off by, everybody sees the headline rise in interest rates and they just kind of, turn away and kind of get unattracted with the prospect of investing in real estate. So, have rates gone up? Yes, but can you still survive in this market? Can you thrive? Definitely. There are so many investors across the country that will tell they're having close to record years. They're not seeing the lowest interest rates, but they're still able to secure properties, turn a profit, whatever the case may be, whether it's a long-term rental or the short-term purchase and rehab. There's definitely still avenues to success out there. So I think a lot of it has been keep your head out of the news. It's good to stay in the know, but at the same time, don't let that deter you from your goal of, having a very successful business, having a successful portfolio, being able to invest in properties, when you see them, when they're a good fit for you. There should still be no hesitation. Yes, there needs to be some education, but you're still going to want to, go full steam ahead. And it puts you in a better place, if I'm being quite honest. If you can, survive through this year where rates have, had a pretty significant jump, then you can pretty much survive in any climate. So I think a lot of investors are taking it as a badge of honor, that they've made it through the year 2022. They've seen some profits. They've had some ups and downs, but that's life. You can pick any profession and have some ups and downs. So I think, there is some cause for positivity here. Rates have gone up, but opportunities have not, decreased. So, kind of finding that middle ground of, forging ahead, like I said, still being able to find those properties and having the right outlook about it is pretty much, what we try to tell investors, and, the most important message, because, it's not going to be perfect every month of the year or every year of your investment career. So, you just got to find ways to adapt, find different ways to succeed, diversifying the portfolio, as well as, some of the plans that you have for the properties that you may invest in. So I think this year has given a lot of people a chance to, better themselves as investors, learn more about it. With the rise in interest rates, a lot of people are, clicking more, trying to educate themselves better. And that can only be a positive for you if you think about it, take a step back and think about it. So that's kind of where we're at. That's where we're trying to, tell investors, if you can make it in this year, you can make it in any, and the rates don't go up forever. So, like you said, building those relationships, going forward. So when the rates do decrease, business is just so much more easier, more convenient for you now that you have those relationships in place.
Yeah, it's great point. I'm actually very bullish. I actually believe that this is where real estate investors make all their money. I'm a third generation real estate investor. This is my third real estate cycle that I've been investing in. And I told my CFO the other day, I'm ready to double our net worth in this time period. This is where this is when it's time to make hay. When everybody else is nervous and running out, we need to get specific and run in. I like the point that you made about, rates and adjusting. The thing is if you're underwriting properly for what your rates are today or what you believe they're going to be for tomorrow, it may leave meat on the bone for you later. We don't know that rates are going to stay here. They may drop a little bit later on. They may go stagnant. And we still have a solid asset class. Real estate is going to appreciate. We're still going to see the benefits of taxation, the tax benefits of real estate. There's no reason for being fearful. This isn't some massive drop off a cliff like 2008, 2009. This is market correction. This is a little bit of undulation in the marketplace. And the lenders, you guys want to see real estate investors succeed as much as real estate investors want to succeed. Yes. The last thing you want is a real estate investor to go out of business, because then you don't have a client anymore. So I think that you made some really great points there. Let me ask you a little bit about new construction versus fix and flip. It's kind of the new craze. I mean, maybe not the new craze. Maybe the last couple of years it's been the craze. We're 5 to 6 million homes under build in the United States right now. And a lot of guys that were doing rehabs have moved into the new construction space. Are you seeing a lot of movement in there still? And what are the states you're seeing some of the new construction jumps in?
Yeah, so new construction has been definitely an avenue where people want to, broaden their horizons, expand their portfolio, whatever cliche you want to use. But it's definitely something that we've seen on the rise. Florida, I'd say most importantly, a lot of, in the Southeast, outside of Atlanta, we've definitely seen a rise in that. So I'd say the southeastern part of the country, to answer that bit of the question, has definitely been the most that we've seen for ground up construction submissions. It's definitely, sharpened RCN Capital a little bit as well. Previously, when I started, we didn't even have a ground up construction loan program. So over the course of the past 18 to 24 months, we've brought that back into the fold. We've tried to perfect it as best we can, give it a competitive option for the lender or for the investors out there. So definitely the ground up construction space is on the rise. I think, just that opportunity for the investors to put their stamp on a property is a little bit more appealing. There's not a lot of room for creativity sometimes in the investment real estate space. So for people to be able to go in, build a home from the ground up is just something that they really want to take that opportunity, take advantage of, and when lenders are funding all of the construction costs, that's a huge burden off of somebody's shoulders. Previously, it was just the rehab costs that were 100% funded. Now, if somebody can get a whole build on a home funded, that's something, that just expands their potential. It's great experience as well. People that are trying to get into the ground up construction, we definitely applaud that, because A versatile investor is one of the best investors, in my opinion. Somebody that has experience, like you mentioned, in the fix and flip space, but also in the long-term rental space, the 30-year, and then in the ground-up construction. So if you are able to look at, whether it's vacant land or a home already standing up, if you can, have experience doing any number of things with a particular property, that just makes you a better investor. So the ground-up construction is definitely something that we're seeing on the rise. We're closing them at a much quicker clip than we were at the beginning of 2022. Part of that was, on us just trying to search for the right guidelines, search for the right program, so we can have something that investors are really seeking out instead of, weighing their options. We want RCN Capital to come to the front of their mind first. So it kind of took some perfecting of that loan program. But now it's, full steam ahead with the ground up construction. Definitely something that's gotten more popular.
That's great. A lot of the comments and questions that I get is, right now, conventional lending is difficult. Underwriting guidelines have tightened up. I think a lot of real estate investors that maybe just specifically use conventional and didn't use private lenders are now considering it. What are some of the benefits of using a private lender versus going to your local bank or credit union or whatever, more conventional lending structure you had was?
Yeah. One of my favorite conversations to have, to be honest, just so people are aware of the options that are out there. A private lender like RCN Capital is pretty much tailoring their business model, their loan programs to, real estate investors. Banks are not really doing that. They're typically, doing what's best for the bank. RCN Capital every day is striving to, perfect our programs so that investors can benefit from them as well as us. I would say the biggest one is the variety of the products. So, you might be pigeonholed if you're going conventional in terms of, they'll only offer loans on maybe a long-term rental on properties that are already in place. They're a little bit more shy about, the fix and flip model because there is room for error. RCN Capital takes that into account. We want to cover that rehab budget, take the onus off of the investor as much as possible, and make that fix and flip process as easy as possible for them. I think another one that people really appreciate is the less documentation on the private lending side. A lot easier to get approved. There's not that annual income, the tax returns, a lot of documents that you can just drown in, quite frankly. When you're dealing with a bank or a conventional lender, you don't see that on the private side. We are really trying to get that deal closed as quick as possible. Yes, there is still some documentation we need. There's obviously not going to be, a no documentation route ever, but we want to make it less invasive for the investor. We want to make that process, simple, convenient, and most importantly, repeatable. If they have an experience where they're like, wow, that was all I needed to do to get approved for a loan with a private lender, let me turn around, find a property, and go right back to that same lender just because it was so convenient, so easy to work with. There's less restriction on investor-specific strategies as well. A lot of the times when we have these conversations, from the investor's point of view, they're actually hitting a ceiling when they're working with a conventional lender. Once they start having loans out on 3, 4, 5 properties, which are just, from an investor standpoint, those are just routine fix and flips that will all be done within a year. Banks can start to back away at that point and say, whoa, you've got way too much on your plate right here. We're not very comfortable, putting out another loan for you. So on the private side, we're, again, take as many out as you want, as long as you're paying us back. Just keep going, keep finding those properties. We'll keep writing the checks for you, and everybody can kind of move forward with their business. I think a lot of times the investors can get frustrated with the banks because they'll hit that ceiling, and this is just a normal Tuesday for them. But for the bank, they're checking every number, this and that, and things aren't adding up. So they become much more hesitant, to lend to an investor, a savvy investor that has a pretty, diverse real estate portfolio. The banks start to back away. In terms of a private lender, that's exactly what we're looking for. We want to fund as many of those deals as you can bring to our table. So I think that kind of seesaw right there, when banks start to back away, the private lenders are the happiest, and that's where we can feel like we can help the investors the most, because we want them to grow exponentially just as much as we do.
Yeah.
I think too,
Those are some really great points. It's funny just to jump in there real quick, and I'll let you go again. But I was talking to a banker the other day, a conventional bank, and I use a lot of private lending as well, and I'm a real estate investor, and I've got close to 4,000 doors. And the thing is, anytime I walk into a bank and they hear numbers like that, it totally scares them, right? Like, they see me as an anathema. Like, they're like, what are you doing? You know, like, I walk into a private lender and you say those numbers, and they're like, well, here's the red carpet, you know,
yes,
like,
exactly.
What do you want to do? You know,
the
like,
VIP treatment. What can we do? Sending the best loan officer your way, things like that. So, you got me all riled up here. I could go on for the benefits of the private lending, but I think for some of the newer investors out here, it's kind of good to hear. We've talked a lot about, what we can do when we see an experienced investor, but self-employed borrowers and people with a lack of experience can still get qualified with a private lender. I think that's one of the biggest things that people are you have that eye-opening moment where they're like, oh, I can actually, have a viable career just starting from scratch. RCN Capital in particular, we can see zero experience on a fix and flip. And if you bring it to my desk and the numbers make sense, we're going to approve somebody that doesn't have any previous experience.
Right.
And we know how volatile the real estate investment space can be. So being self-employed or having this be their only, source of income, as long as they can come to the table on that first deal, show us some numbers that make sense and that make us want to proceed. Zero experience is not a deal breaker, which I think is huge for investors to realize.
Yeah, that's really, really great. Our time's kind of drawing to a close end here, but one last question I want to get in. What are some of the hot markets? You said for Florida, you said you've got a lot of new construction. Is Florida also that hot in fix and flip, or what are maybe 2 or 3 of the big fix and flip markets or long-term hold markets you're seeing movement in right now?
Yeah, I would say Florida is obviously going to be at, the hub of a lot of conversations. Florida, Texas, California are 3, juggernauts when it comes to real estate investing, but they are hard markets to break into. I did kind of mention Atlanta there for ground up construction, but the southeastern part of the country, especially Atlanta and the surrounding suburbs, are huge markets right now for any type of property. The Midwest as well, we're seeing a lot of activity in Ohio, Pennsylvania, states that wouldn't normally come to mind in the Midwest. But the thing about those is the return on investment or the profit that these investors can make are very good in those areas because some of the home values are starting at such a lower price in the Midwest. And then, once you put the facelift on it, or, a lot of these states have counties circled or, cities circled in the surrounding suburbs where they really want to, put an infusion of cash into those areas and make them more appealing for people. So we're seeing a lot of that in the Midwest. Like I mentioned, Ohio, Pennsylvania, New Jersey is a huge one as well. New York, we see a lot of business, but, I would say Georgia, some of those states in the Midwest, and then you're always going to have a conversation when it comes to Texas, California, and Florida. And I think Arizona deserves to be in that conversation as well. They are, on the rise in terms of a very desirable location that people want to live in as well as invest in. I think those two kind of go hand in hand. So those are definitely some of the trends in terms of states that we're seeing on the rise.
That's awesome. Thank you so much for being our guest today. It was great to have you on the show. I'm sure I'll see you at a conference here in the near future.
Yes, I'd love that.
And make sure you give my best to Jeff and Erica and the whole team there at RCN. Always enjoy hanging out with you guys and appreciate what you guys mean to the industry. I mean, you guys are one of the largest private lenders in the nation, even privately held private lenders in the nation. And I just appreciate the service you guys provide to real estate investors.
Yeah, thank you so much, Eddie. We appreciate the opportunity. Hopefully we can do this again in the near future, if nothing else. And I do actually have a meeting at 2:30 with Erica, so she'll be happy to hear that this went well, and I'll send her your regards. So thank you so much for the time today. RCN Capital really appreciates it.
And for them to find out more information or to get information on it, rcncapital.com? Yep,
that's correct. That's correct. And then for people out there, they can also email me at nzielinski@rcncapital.com. That's my direct email address. But yeah, rcncapital.com We'll have all the information on our latest, programs, interest rates, of course, anything they want to know more about the company. But if they got a chance to write down my email, they can reach out to me as well. So thank you so much.
All right. Thanks, Nate. Have a great day.
You too. Bye now.
Let me say a quick thank you to our podcast sponsor, which is Real Property Management. Real Property Management is a fantastic property management firm. Working with the right property management firm can put more money in your pocket, not less. Real Property Management provides a higher standard of property management to make sure you're maximizing the return on your investments. Experience the real difference today with Real Property Management. You can visit them at realpropertymgt.com. Thanks, Think Realty listener and viewer, for being a part of the podcast today. It's been our privilege to host you. If there's anything that we can do to service you in any way, please reach out to us. We're active on all the social channels. Also, if you're not getting our latest magazine, make sure you go to the Barnes & Noble nearest you, pick one up off the shelf there, or go to thinkrealty.com and have it delivered straight to your house like I do. And it's always a great bit of information and really helps you to see the market holistically. Everything that's going on from single family to multifamily to commercial, self-storage, mobile homes, you name it. We talk about it and bring in experts in that field to give you great content. Think Realty, if you're not already making plans for next year, you're going to be missing out. We have a great conference coming up for Think Realty in Houston next year, March 23rd and 24th. And I want you to make plans now to be a part of that show. It's always a fantastic show. Houston's a great market, and we'll have experts from all around the nation come there and speak. And right now I'm offering a buy one, get one free on the tickets. I want you to come and bring a friend. If you go to thinkrealty.com/podcast, thinkrealty.com/Houston, and write the word podcast as the code, then you'll get the special pricing on the buy one, get one. Put 2 tickets in your cart, put the word podcast, you see it right above my head, all in caps, and put that in the code there, and you'll get the free ticket as a buy one, get one, and we will see you in Houston.